there's this constant question of like, what is crypto good for? When is the mainstream adoption coming? What clearer sign than this? One of the biggest payments companies in the world is using blockchain technology as the rails for their financial transactions because they've recognized that blockchains are just better financial infrastructure. Near one account every blockchain, made possible with chain abstraction. Solana's largest community conference is almost sold out. Keep watching to learn more. Hi everyone, welcome to Crypto with Cami, where we go through all the main headlines in crypto and DeFi in the past week in 30 minutes or less. This is the show for the week starting April 22nd. So some of the main headlines this week: Consensys is suing the SEC, Stripe is adding crypto payments, and Renzo's Restaked ETH DEPEGS. Let's start with Stripe. I think this is just huge. So Stripe is going to allow its customers and businesses to pay and receive starting with USDC on Solana, Ethereum, and Polygon. Right now, between 20% and 30% of all digital payments, payments done online are done via Stripe. Payments on websites like Google, Amazon, Lyft, Apple, Walmart, Target, they all use Stripe. So now when you're going through the familiar checkout interface, pay, you'll see right there next to the option to pay with the credit card, the option to pay with crypto. And the Stripe co-founder, John Collison, made a demo of how this works. And here you can see, this is kind of the very, very familiar interface that we're used to seeing in almost, in just like a great majority of websites. And here you have this little box that says crypto right next to card and Klarna. And what's interesting about this is that when you go through the flow, you click on crypto and you click pay, you'll see the option to connect a wallet. You'll select whether you're paying with USDC on which chain, and then it'll ask you to connect with a non-custodial wallet. Interesting that John Collison of Stripe chose to do the demo with Phantom Solana chain, and here he is going through the transaction, confirming a transaction on the Phantom wallet to make a payment with USDC. This is integrated directly with the Stripe flow, with the Stripe payments flow. So this is not some sort of like fake crypto payments. Like it's not some sort of crypto that's actually settled inside of the Stripe balance sheet somehow, but really it's dollars that are being transferred to and from the different ends of the payment. No, it's actually crypto. It's an on-chain transaction that's happening via Stripe. So I think this is huge. You'll be able to pay your Lyft ride with crypto. You'll be able to pay your App Store purchase, your Substack subscription. These are all companies that use Stripe on their backend for payments. I think there's this constant question of like, what is crypto good for? When is crypto going to be used by everyday people? When is the mainstream adoption coming? I mean, what clearer sign than this? One of the biggest payments companies in the world is using blockchain technology as the rails for their financial transactions because they've recognized that blockchains are just better financial infrastructure. So now we have the two payments giants, PayPal and Stripe. Between the two of them, they control most of digital payments. and they are both going full on crypto. We've seen how PayPal has issued its own stablecoin, PYUSD. They have started to integrate PYUSD in payments as well. Now Stripe is using USDC. So I think, again, this is huge news. It just shows that crypto is becoming more and more integrated into our everyday life. So yeah, fully recommend watching this video, and yeah, we'll be excited to start paying, most of my everyday purchases with USDC. Now, moving on to next big headline, Consensys is suing the SEC. So obviously Consensys is the technology company behind major Web3 projects like MetaMask and Infura, and it has filed a lawsuit against the U.S. securities regulator, the U.S. Securities and Exchange Commission. They are saying they are attempting to protect Ethereum from what it says is regulatory overreach. Of course, there's this existential threat to Consensys from the SEC wanting to say that, one, Ethereum's native cryptocurrency ETH is actually a security, and two, the SEC is trying to argue that wallets, non-custodial wallets, and centralized crypto exchanges are actually securities brokers. So again, this would be an existential threat to Consensys, which is the maker of MetaMask, one of the most used non-custodial wallets. Consensys argues that the SEC is unlawfully extending its regulatory reach in its attempt to say that ETH is a security. They're saying this could make it impossible for developers in the US to build on Ethereum. And again, it undercuts its main business. So it's very much in Consensys' interest to fight the SEC on this. So it's asking the court to affirm that the SEC lacks the authority to regulate Ether. And the key arguments it makes is that ETH is not a security but a commodity, as it has been classified as a commodity before, and that user-controlled software such as the MetaMask wallet should not be treated as securities brokers. Of course, this comes just 2 weeks after the SEC sent a Wells notice to Uniswap, indicating that the regulator is planning to sue the decentralized exchange, and the SEC has already sued Coinbase, Binance, and Ripple, among hundreds of others, crypto companies. But the SEC has lost in key sections of these big cases against Coinbase and Ripple. And so the crypto industry is prepared to put up a fight against the SEC, and I'd say it probably too early to say that it's winning that fight, but it's not taking the SEC's charge passively. It's charging back, and it's winning in many of the key decisions. So this will be another key case to watch in the SEC versus crypto. Now, next major news this week was in the liquid restaking front. What happened was that Renzo's restaked ETH, called ezETH, depegged to as low as $700, which caused liquidations across at least 2 DeFi apps, Morpho, Blue, and Gearbox. So what happened was that Renzo did the first phase of its airdrop of REZ tokens. So of course they have their liquid restake token, ezETH, is a token that's pegged to staked ETH. It's supposed to maintain the same value as ETH. And they have their own governance token, Res. So they airdropped a first batch of Res tokens. And after this happened, many people who were staking their ETH on Renzo decided to just take profits. They were probably depositing their ETH on Renzo to farm the potential REZ airdrop. So once they got their Renzo tokens, they cashed out, they withdrew their ETH, and that caused the ezETH token to depeg. That means to fall below the value of ETH. And because ezETH was being used as collateral in other DeFi platforms, then that caused liquidations on those platforms, on Gearbox and Morpho Blue. So this just highlights the very volatile and risky sector that's liquid restaking, this new DeFi sector that's really taken DeFi by storm this year, built on top of EigenLayer. And this is part of the risk that can happen. These liquid restaking platforms are issuing tokens that are pegged to ETH, but they are very volatile. And the whole ecosystem really does depend on liquidity that's coming from people farming airdrops. So this liquidity is very fickle, and it can very quickly jump from one protocol, from one dApp to the next as they're searching yield, which of course causes instability across the assets on these protocols. So definitely something to watch and be careful with as you are using DeFi. Also on the restaking front, this is super interesting. Restaking protocols drew in more money than liquid staking protocols. So, we have the original kind of staking related dApps with Lido, which these are protocols that issue tokens to represent staked ETH, ETH that is staked on Ethereum. Lido, Rocket Pool, others issue tokens that represent these ETH deposits so that Ethereum stakers can get liquidity on their staked ETH. And then there's a next layer of that, which is EigenLayer, that opened up the whole restaking system, because EigenLayer allows ETH stakers to reuse that staked ETH to secure other applications built on top of EigenLayer. And then liquid restaking enables token representation of that restaked ETH. Anyways, that little liquid staking, restaking recap out of the way. What happened is that in March, Lido had over, or I should say in the last 30 days, in the past 1 month, Lido had more than 1 billion of outflows, while EtherFi had more than 1 billion of inflows. So there's this shift happening as ETH holders want to maximize the amount of yield they are getting from their ETH. And so because restaking offers more yield, more return on their ETH, they are taking their funds from Lido and depositing them in EtherFi and other restaking platforms. So super interesting trend. Like I said before, there are many risks to restaking, so something to watch. But yeah, again, this is all about people wanting to get the most yield out of their ETH. Next headline, this is TradFi meets crypto news. So Franklin Templeton, the huge asset manager with over 1.4 trillion in AUM, has launched peer-to-peer transfers for its on-chain U.S. government money fund. This is its tokenized U.S. Treasury fund. And so it's now enabling investors to transfer shares of the funds between each other. This is really interesting because these big Wall Street firms, like is the case with BlackRock, which also has a tokenized U.S. Treasury fund, they sell these tokens, these tokenized shares of these funds to institutional investors who have gone through KYC and so on. They sell the shares, but these investors usually just keep those tokens in custody. There's not much trading happening. But now Franklin Templeton is actually enabling trading between investors, between holders of their Benji fund. These trades have to happen through the Franklin Templeton platform. So they have their own Benji platform where trading can happen. And of course, investors have to go through KYC AML. And then going to the Bitcoin news front. So Bitcoin's new Runes protocol is fueling sky-high transaction fees. Average fees on Bitcoin soared past $36 from roughly $5. And this is because all of the activity that's happening around Runes, which is this kind of NFT-like project that was born out of Ordinals. And, all of this activity on Bitcoin is causing fees to increase. And speaking of Ordinals and Runes, we interviewed renowned investor Arthur Hayes, and he's super bullish on Ordinals. He says that they are bringing human culture to the oldest, largest, and most valuable crypto community, the Bitcoin community, he told the Defiant. So he is investing on Ordinals via his Maelstrom fund. 2 auctions happened this week where collectors spent more than $3 million in Bitcoin memorabilia. So the first auction was for the Buy Bitcoin sign, this famous sign that was held behind Janet Yellen back in 2017. The whole thing went viral. The original sign was auctioned off, and it was sold for a bit over $1 million. And then the second piece of memorabilia that was sold was the first SAT, that's the smallest unit of Bitcoin, that was minted after the Bitcoin halving. And that SAT was sold for $2.13 million. And then speaking of high-priced items, there was a CryptoPunk, Punk 635, that was sold for a whopping $12 million. Sale was the 4th largest in dollar terms for a CryptoPunk, and it was the 6th largest for for CryptoPunk in ETH terms. Okay, and in less upbeat news, the U.S. Department of Justice charged 2 founders of popular privacy-focused Bitcoin wallet Samourai with facilitating money laundering and unlicensed money transmitting offenses. They were charged with the maximum sentence of 20 years and 5 years in prison, respectively, for the 2 founders. Of creating a wallet that executed $2 billion in unlawful transactions and facilitating the laundering of $100 million in assets, which, of course, it's very unfortunate. These developers, they have just created a tool to transact privately, and the tool they have created isn't doing anything wrong. It's just an exchange that facilitates a private transfer of crypto. There are many legitimate transactions happening on this wallet, and privacy shouldn't be a crime. So very similar to the Tornado Cash case. It's just a shame that the U.S. is taking this approach to privacy-focused crypto projects. Okay, now back to more upbeat news, and I'll go through the last few headlines quickly. Active weekly wallets on Ethereum, including Layer 2 networks, surged past 10 million on April 8th. That's the highest ever. Reya, a modular Layer 2 network optimized for trading applications, attracted more than $100 million within 18 hours following the launch of its liquidity generation event on April 22nd, where they offered boosted points to users who provide assets to the network. And finally, former Binance CEO CZ Changpeng Zhao is facing a potential 3-year prison sentence should the U.S. Department of Justice be successful with its request. So, wow, super busy week. I think in overall, really exciting things happening with Stripe. Good to see crypto fighting back against overreaching regulators. Even if the market continues to be a bit choppy, we're seeing great news in terms of adoption. And that's it for this week. Super busy week. Even if the market was a bit choppy, still trading kind of sideways. We saw, I think, what was good news overall with adoption led by Stripe and with crypto fighting back overreaching regulators. So let me know what you think. Like, subscribe, share, and all that good stuff. And hope to see you next week.